Hey everyone, Andy Moss here with your look at the weekly charts for Saturday, August the 15th. Week before last, we were looking for confirmation of the potential reversal patterns, and we got that. And this week, we find continuation. Markets are moving higher almost in unison there. So we're going to go through the big picture of the market and sector charts, listen to the message of the price action, and see what we can do to prepare for next week. And before we do, remember, if you want more charts and market commentary, come join us at Alpha Trends, where you'll get actionable trade ideas every day from Brian Shannon and me, along with ongoing discussion and trade management as those setups trigger and develop. You'll also get multi-time frame stock and market analysis, regular educational Q&A sessions, an active Discord community, and continuous swing trading education, all designed to help you refine your process and become a better trader. Visit alphatrends.net today and sign up for a 2-week trial. Looking at SPX, we saw the hammer back in this candle. We saw the breakout last week, and then we see continuation and on to a new closing high. That price action continued nearly across the board. Q's got the hammer and the confirmation with the breakout back above all the moving averages. Not quite at new highs yet. This weekly closing high was 740 and 62 cents. And this week we closed at 731 and 7 cents. So very close there. DIA also not quite a new closing high, but we have high level consolidation within last week's large breakout move, and IWM is on into new highs. They're closing the week at 305.09. So we've got solid participation across the 4 major market indices. The price action continues upward. All are above their moving averages and making higher highs and higher lows. Bitcoin, on the other hand, still stuck below this 65,500 level. We've been watching this for many weeks now, and it's back below the moving averages and continues consolidating just underneath this resistance level, and the odds point to lower action. Why? Because it is a lower close down in this area below all of the declining moving averages. That tells us that the weight of evidence is pointing towards bearish action on Bitcoin. In the meantime, the dollar is back below this VWAP for the second week in a row. This is the anchored VWAP from the highs of January 2025. The dollar has gone back into its consolidation range and not doing anything exciting, which is the similar case for volatility, continuing to be sleepy and quiet, drifting lower down into ranges we haven't seen for several months. Looking across the pond, ACWX, that's the rest of the world minus the US, new weekly closing highs. China found resistance near the declining 40-week moving average and is now back to test this level of polarity. It was support back here. It was a little bit of support here and then potentially turned resistance. It was only very temporary as price moved up near the declining 40-week and back down now to test that level once again. So no real resolution for China. Bonds continue to chop and drift lower, and nothing changing there. Crude oil was a bit subdued this week, although it was positive action. It's still between the moving averages here, which are a bit choppy and out of order, and it stopped right on the anchored VWAP from this low before the breakout, which we've been watching for some time. It's been erratic and moving wide on either side of that and going nowhere with any direction at this point. Gold, on the other hand, we noticed it holding this area of support many weeks ago, and it finally got the breakout last week, and this week it continued that move right into the VWAP off the highs and just underneath the mostly flattening 40-week moving average. Maybe still a slight incline there. RSI is back in the middle of the range, and so gold may take a week or two to figure out what's next as it runs into some resistance here. Silver similar action, but still has a ways to go before that moving average and the VWAP anchored from the all-time high. Looking into our relative strength relationships, growth versus value holding up well in favor of growth, although not a directional change in trend yet. Consumer discretionary versus consumer staples took a slight reversal last week, but still above the shorter term moving averages. The declining 40-week moving average here has been resistance for the last couple of weeks. We'll see how that one develops. High beta versus low volatility continued in the favor of risk on. So potentially a little bit of a mixed message here on these two relationships, and high beta versus low volatility still creeping up into the risk on area. Moving down into some individual sectors and areas of the market, we've got the stocks still trying to navigate the area between these moving averages. The 4-week moving average now rising slightly, the 10-week flat, price closed just below the VWAP off the all-time high. So it's trying but hasn't broken out yet. XBI still with a nice recovery and just very orderly action after this long consolidation. It broke out, it consolidated, it broke out, it consolidated. Now it's rising again. You know what to look for on XBI. The next level of interest overhead, if you're involved in this, would be near 175. This high of this candle way back in February of 2021, you see on the chart labeled here 174.79. So that's a level of interest to pay attention to if the price action continues higher. Software holding this level well so far for the week. It's been a big move. It needs some digestion. Maybe that's we're seeing the beginnings of that here. And Mag 7 as a group held up pretty well. It's an inside candle in the upper ranges of this breakout, and it's above the moving averages and showing higher direction after this big consolidation pattern of several weeks ago. So that's encouraging for the Mag 7 as a group, and we'll get to more of that in just a second. In the meantime, financials still surfing this wave of the 4-week moving average, just gradually higher and higher. That's a good sign for the overall market. And energy with quite a breakout move this week. I should say energy stocks. We saw crude oil not doing much, but XLE has a nice breakout move here and is back very close to a new weekly closing high there. So that's the action on the indices and some individual sectors. Let's dig quickly into some of the Mag 7 names on their own, and we see Apple still holding down here. It's below the 4-week, below the 10-week, but holding this VWAP. The breakout move was substantial, and it's given a lot of that back now, and not an immediate bounce like Apple bulls probably would have preferred, but it's holding up okay. So it needs to get back over let's call it 317 to really solidify a move back to the upside. Amazon holding up just fine after this huge candle on earnings week. It went up into new high territory and now back to test the rising 4-week moving average, or nearly there. So not broken, just taking a bit of a rest. Google could not hold a breakout over this trend line last week, and more importantly, the VWAP from this low and the moving averages barely held. This week it's back in between those and just a bit stuck here again. So Google is not ready to go, or wasn't ready to go yet. Can it hold this and resume higher action that week, this coming week? That's what we want to be watching for. If it doesn't hold this area, the next likely test would be the rising 40-week moving average down here around 333, and then potentially even this trend line just below that. Meta still has nothing good happening for that stock. It's grinding lower in mostly a consolidation range, but within the context of an overall downtrend on this time frame. But it's worth zooming out and noticing that it's still up in the very high upper reaches. This is rounding over a bit below the moving averages or near the declining moving averages, makes us think that lower action is possible. But this is also overall just a very long consolidation period for Meta as that stock tries to figure out what it wants to do next. Microsoft, similar to software as a sector, holding up very well. And it's pretty stretched here. It has been for a couple of weeks, but this consolidation, this slight reversal up here, maybe this leads to a little more decline. We've got a potential gap fill in here between roughly 465 and 476. We've got a very steep rising 4-week moving average. We've got some price history that back in this range, so lots of potential tests of support or tests of potential support lower on Microsoft. And it could also just consolidate in here and rest and move sideways a bit before testing recent highs. NVIDIA looking much better than it has in quite a while. Last week we talked about this big ignition candle or solid green bar here that we haven't seen in that magnitude for many months or weeks. And even Tesla is trying to continue to improve. It's got a long way to go, but decent reversal so far off of this hammer from a few weeks ago. It needs to get above the declining 10-week moving average and back into this area where it would have really a lot of potential supply there. So not out of the woods on Tesla by any means, but the last few weeks have been somewhat encouraging. So there's your quick look at the big picture of the market, indices, individual sectors, and Mag 7 names. Looking at breadth and participation, we've got another solid week in the percentage of S&P 500 stocks above a 50 and 200-day moving average. Nothing wrong with this chart at all. We've got high percentage levels, high participation on both of these measures, and both are trending upward for many weeks in a row now. A little bit of a rest here on the percentage over the 200-day, but that's not a surprise after last week's large jump. Looking over at the bullish percents charts briefly, we've got the S&P 500 bullish percent index up into the 70s, adding another X to this column, and very strong, but also, and this is not to paint a bearish picture, but just noting here that this is, as we've been saying for the last several weeks, in the really extended areas is where we start to pay a little more attention. It's strong, it's above 70, and so once it gets up this high, how many stocks are left to get on a point and figure buy signal? Not nearly as many. So we'll keep an eye on that and see if it rests up here, or a reversal would be a warning signal, obviously. Qs very high, also up above 77, and just really a straight up move off of this reversal from down at 32. And so that is strong participation, but something we'll continue to monitor. And the NYSE overall, type the signal correctly here. Still riding around here just north of the center line. Around 61 is the calculation, and not washed out and not even on a new buy signal yet. So still some room for expansion there on the NYSE bullish percent index. And then a quick glance at the calendar, and we can see a relatively quiet week. We have been in the middle of just a ton of economic data and earnings reports for several weeks now, and that starts to slow down. You can see there's a lot of stuff on the calendar here, but it's none of the headline information that we see and pay special attention to, like a Fed meeting, like an interest rate announcement, like CPI and PPI, which we had this past week, or PCE, or any of that kind of stuff. That there's not any really big reports from economic news or earnings this week. As a matter of fact, that here on TradingView, what I like to do, you go to this calendar, you click the earnings, and then you sort by market cap, and you can see who are the biggest companies announcing on any given day. And if there's nothing I pay a lot of attention to on Monday, Tuesday we do have Home Depot, Baidu, some other names in there. Wednesday looks like ADI, Analog Devices, TJ Maxx, Lowe's, Target, so on and so forth. So you can always check that out on the TradingView calendar there if that is the charting platform you use. And so a little quieter in the coming week. We've got solid price action. We've got healthy participation and breadth. We've got a lot of things resuming uptrends, getting to new highs, above the moving averages, and what looked really choppy for quite a while has suddenly gotten to look very good. So what happens next, nobody knows, but for now, we're in a situation of higher highs and higher lows above rising 5-day moving averages for 3 of the 4 stock market index futures. The Dow here is lagging a bit. Let me show you the ETF versions of these. This is a 30-minute time frame, what I like to call the roadmap. And you can see all of these, the SPYs, Qs, and IWM, trying to get out of this consolidation range of the last week or so and putting in new highs, new higher highs and higher lows above that rising 5-day moving average. Only the Dow is struggling with that a bit, but notice how close it is, and it's still overall in a consolidation range. So the evidence points to higher prices being the more likely outcome. That is what the price action is telling us, and what we should continue to look for. Swing trade setups are increasing in frequency and quality. We're seeing more names, more opportunities, and more chances to get involved with some really good swing trading positions there. So that's what I see in the markets on the big picture view, and drilling down into the smaller 30-minute and 1-hour roadmap charts. Things look good across many different multiple time frames there. That is nice, but don't let it get you complacent. We always have to manage risk. We always want to be taking some profit and raising stops along the way. Risk management is job number 1. So keep that in mind as we head into what looks like a pretty quiet week here in the second half of August, and we'll see what comes up. I'll have more every day this week, twice a day, and you know where to find it. If you want more charts and market commentary, again, come join us at Alpha Trends, where you'll get actionable trade ideas every day from both Brian Shannon and me, along with ongoing discussion of trade management as those setups trigger and develop. You'll also get multiple time frame stock and market analysis, regular educational Q&A sessions, an active Discord community, and continuous swing trading education, all designed to help you refine your process and become a better trader. So visit alphatrends.net today and sign up for a 2-week trial. See what it's all about. We'll look forward to seeing you there.